following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all for another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. And, of course, Apple being rather rude and having their big press event during my show. But I'll give it a call live. I've got about 4 or 5 live blogs up, and we'll be watching just what Apple is doing. And, of course, Apple had pullbacks fairly significantly. The thought was they wouldn't have a prototype of the iWatch to show today and may not have enough details about the NFC pay system for mobile payments. But it looks like they've had both, and they're pretty much knee-deep in the demonstration of the new iWatch at the moment. As a fan of expensive Swiss watches, I was rather shocked a couple of days ago to hear that the main design guy said that he was going to put the Swiss out of business. Well, I've seen the new watch, and it is nice for an electronic device, and the Swiss don't need to be worried about it. I'm not going to give away my Rolex in gold when I want a flash watch on my wrist. But the question is, or I guess the belief on Wall Street is, that a new iPhone and even a new bigger iPhone will only keep the paddle wheel going, that you've got to keep upgrading people year after year, and it's really not going to move the needle to build a new phone, that part of the market is saturated. Much like the Kirby vacuum cleaner, they're going to be looking at add-ons and other things, especially with the lagging sales of tablets. Now that they're getting into the phablet market, it will probably cannibalize at least some of their iPad sales. So what they're really looking for in the announcement today was this iWatch and maybe a $300 or $400 product that could really add additional money to it. We knew about the NFC payment chips. Apple's going to call it Apple Pay. They've got quite a slew of people that have signed up for it, especially at high-frequency retail outlets. Walgreens, CSV. Looks like they've got MasterCard, Visa, and American Express on board. And the question is, do you want to just keep your friends close and your enemies closer? If you've seen what they've done to the music industry, then you've got to be very careful about what you do if you are MasterCard or Visa or any of these other companies, because what if Apple just decides to cut you out? Let's say that you do get a couple, let's say 50 million people to jump ship for MasterCard and Visa and go to you with your mobile payment system. But when you actually do the numbers, the whole payment system probably won't move the needle for Apple, at least for a few years. So they're pretty much looking at this iWatch as the attachment that will drive additional sales this year. And, of course, probably the best thing to look at is the share price. Of course, we'd gotten up to, 103 and change or something on Apple. Came back down fairly hard on about $4 on the Samsung release, where they showed that they had curved screens with actual pixels being displayed on it. The new iPhones are going to be 2 versions. We saw the iPhone 6 and the iPhone 6 Pro today. Basically, they're going to have the starter phones all the way from 99 cents for an i5C from AT&T on contract to the latest iPhone 6 Pro, which is the large phablet version at 5.5 inches, starting at $299. So those phones will go up to $699, depending on how much memory are in them. But basically, you're going to have an option from AT&T for 99 cents, $99, $199, $299, and up from there, depending on if you want additional memory in those boxes. About $100 for each jump in memory, up to about I think you can add about $300 from what I've seen so far to the iPhone 6 Pro, which is the large version. You're going to have about 1 million pixels on the smaller iPhone 6, about 2 million pixels on the iPhone L. But we knew all of that Friday with the leaks, especially the Chinese website leaks. There are a few things that we haven't seen yet, and that's what the switch is for on the side of the case. But right now, pretty much knee-deep in the whole iWatch issue. And, of course, probably what investors are really looking at is this iWatch going to be a mover and shaker, and how long before they're going to ship it. Now, for the iPhones themselves, going to be shipping on the 19th, going to be starting to take pre-orders, I think tonight or tomorrow, depending on who you listen to on these live blogs. And going to be interesting to see when they start tearing apart these iPhones. Normally, there's a couple of websites that are pretty big on tearing everything down and letting you know who got the part business in Apple. But pretty much assuming from the figures that they're giving out for the longevity of the battery and some of the other features about how fast the graphics processor is in it. Apple, probably about 9 months ago, maybe a year ago, signed a deal with Intel to have them build the big processor chip. And from the, it really looks like they went from the old 28 nanometer sized chips that were in the previous phone to 14 nanometers from Intel. And I think you can really see it in what they're quoting for a higher battery life. Some of the questions that haven't been answered yet is whether or not there is a communications chip in it that is not just Wi-Fi or NFC in this watch. And I don't know if they're going to answer that today either. But the question is whether or not you're going to have both the iPhone in your pocket and this on your wrist. Does that just tether you to the iPhone, or is it autonomous? Would you be able to take everything you needed with you just on your wristwatch? And those are the questions we're going to be looking at here the rest of the day. But you know, probably going to be a good idea to just keep an eye on Apple and how it moves out here. Trading out at 101.60. Yesterday, we had a caller call in and ask whether this thing was going to be popped, and I knew it would. Now, the question is going to be what investors do over the next few weeks. Certainly looks like they have a fine product, and the question is it that much better? Are people going to move up to it? And I think part of the answer is yes, but is it going to, again, move the needle? Apple has gotten so large that, of course, it is a slave to the large law of large numbers. And you really have to put on billions of dollars to really get anything moving on Apple. And I'm looking at all the kind of looks at it. And I figured normally when somebody shoots their mouth off, as big as Johnny Ives did, the designer of this iWatch, generally I probably know that he's going to be probably a little bit, I'm going to be underwhelmed, and I am. It's kind of rectangular with rounded edges and a little button like it looks like a watch, and lots of watch faces and stuff. And it's going to be interesting to see. I'll look at the break more what's going on, but it is one of these things where, you know, it's going to be kind of a tie. And we have other things going on at the same time. We'll try to get them in during this break, but it is interesting. On this day in 1974, the day after President Gerald Ford pardons Richard Nixon for Watergate, Wall Street tanks. Not many people care about stocks anymore, but those who do are more eager to sell than buy. On thin volume of just 11.2 million shares, the Dow Jones Industrial Average plunges 2.2% to 662. Anyway, kind of interesting. In the coming year, it would rally almost 25% in the next 12 months. And we moved on after the news is out. And why people sell, buy the selling and sell the news a lot of times. It is on the high end, a lot of times the low. High end the top, and on the low end the low when you wash everybody out. And it certainly did happen in 1974. We are coming on and up to the 9/11 anniversary date. And I've got just a minute here. I will say that if you have Netflix or you have any other available DVD, I would recommend that if you haven't seen it yet, there's an excellent documentary called Man on Wire. And one of the best docs, I think maybe the best doc I've ever liked. I would say that even the critics say it's the top five documentaries ever made. And just really present when you think about what happened in 9/11 and what happened this day when they man stretched a wire and walked across it between the two towers. But excellent documentary. Anyway, going to try to get back to other things going on in the market, which is already in progress. What can you say? Wanted to get into Amazon. Seeing some of the more significant traders really rain on Amazon. That what they have disliked was that Amazon is borrowing yet another $2 billion. With that $2 billion, it looks like they're going to spend it. So everybody's just kind of tired of Amazon spending more money and waiting for them to flip the light switch on to making money. The other thought is that there are a great deal of people out here selling Amazon to buy Alibaba. The symbol will be BABA. We said yesterday that, of course, it's going to be a sliver deal. But a lot of these big funds need to raise cash. And as long as Amazon is off 15% of the year, when we have stocks like Intel and Microsoft just plowing out new highs, it seems like every other day, it's awful tough as a fund manager to continue owning Amazon. If the market correct, I would really like to see this move, but I have a feeling we're going to see probably a few more days of selling in Amazon and then this peter out. When we come back, we're going to, see that it's got stock quotes on the iWatch now. So we'll see how well that works. Anyway, we'll be back, and I'll be catching up on my blogs during the break.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're going to go to our caller, John, in Philly, in just 1 second, and just going to update you on the iWatch. Looks like Larry Pezzamento would like this. It's got all kinds of moons and astrological symbols on it and stuff like that. How you doing, John?
Hey, David. I'm very well. I thought I would call in today since Apple has announced this big foray into mobile payments and ask you about Visa and more importantly, not necessarily just Visa the stock, but to discuss and ask you to share some of your expertise on this whole business of the booming mobile payments, who the winners and losers will be. And so I wanted to just broach that. I might first just mention, I was reading the Alibaba prospectus after it came out last Friday night, and embedded in that was just something I found just absolutely astounding, namely that Alibaba as a company has something close to 300 million individual buyers signed up. And in the past year, of the people using Alibaba and purchasing, doing transactions, something like mobile payments a year ago accounted for something like 10 to 15% of total. Today it's over 30. So you see this just exploding. You've done us the great service starting maybe 18 months ago about describing what Bitcoin, digital currency was all about. And then, of course, we see just last week, the country of Ecuador. By the way, Ecuador gave all its gold over to Goldman Sachs and asked Goldman to keep it safely for them about 9 months ago. And just all of a sudden, Ecuador says they are planning to launch digital currency within the country exclusively sometime soon. So we've got all this going on, and when we're talking credit card payments, this, that, and the other, of course it's, very helpful for easing transactions, lots of safeguards, all that's true. And retailers, every time I hear, are always upset how much they have to hand over to Visa, MasterCard just in processing fees. So where is this going? Who wins? Who loses? And then lastly, what do you think of Visa stock? Which way?
Visa itself, I would say, I'm waiting to see which way it breaks first. It is in a asymmetrical triangle, that is lower highs, lower lows, and it's getting out to the apex of its triangle. The first way that it breaks, 75% of it, is the false break. So if you were thinking bearish out here, you'd want it to go break above probably about 217, close up above it for a day or two, and then come back into the trading range, and that would be the big sell signal on it. On the buy signal, you'd like this thing to pull back a little. But normally in these long consolidations where they get narrower and narrower, about 75% of the time, the first break is to the wrong side. So I think I've seen enough of these in the current charts. If you listened to yesterday's show, I thought that we were probably going to hang around somewhere around this 2,000 level on the S&P cash all the way through the Alibaba IPO. We're probably going to break higher than that either at the IPO or a couple of days later, and I suspect that will be the false break on most of these stocks late September, and then you're going to have your opportunity to pull the trigger if you're brave enough. So that's my theory at the moment. If it were to break lower, then I think maybe we do have higher out here in the S&P to go. But right now, I'm basically going to fade whichever way most of these stocks come out of these asymmetrical triangle patterns.
Very good. Very good. Now how about your brilliance on who's going to make money and who's going to lose it on mobile payments?
I quoted The Godfather, you keep your friends close and your enemies closer. And the question is, I think everybody has known that Apple basically destroyed the music industry. They were never able to get Apple TV really going because no one would sign up with them because they all thought the same thing would happen to them. That they were able to sign up enough of these folks is interesting, but you always wonder if the scorpion's going to sting you halfway across the river, like the proverb with the frog and the scorpion.
Yes, you do.
Huh?
Yes, correct.
Okay, everybody knows that the scorpion stung the frog halfway across the river and they both drowned, but of course the scorpion had to say before they drowned, well, I'm a scorpion, that's what I do. And unfortunately, I think everybody knows that now. And is MasterCard, Visa sucking these folks in, or is Apple going to outplay them on it? We'll be back in a minute.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So it looks like the iWatch is going to come in a ladies' and a men's size. So we'll have to see how that happens. I'm pretty sure John went back to trading, and we'll kind of finish up the conversation here. But I guess the question is what's going to happen with Visa's and MasterCard's fortunes, also American Express. And the idea is to get a more secure way of paying for things. Of course, my bet is on getting credit cards with the new smart chips in them. And I think that is the bigger way to look at this. I think we talked about a stock last week that actually does and is in that business. Let me see where we at here. Pay. Let's see how Pay's doing. I want to see how it reacted to the news out here. Verifone Pay Systems makes those little boxes that you swipe your cards with. And, of course, I'm going to be watching this closely because, of course, especially with seeing the way that Home Depot and Target are tied to the whipping post on basically getting the transactions. Now, according to Home Depot, they didn't get your PIN numbers, but a little bit of trying might be a way to actually find them for these cards. This thing's kind of going sideways today, which I think is going to be a good indication of which way the Visa and MasterCard go. But if we start finding that adoption of Visa, MasterCard, and the new smart chips. Probably not a bad time to really pop this out for Apple, in the fact that vendors are going to have to spend more money, and at least vendors are willing to spend money already on conceivably these NFC terminals that they're going to have. It's going to be very interesting to find out who's building those NFC terminals. We don't know that yet, or at least I haven't found it yet. But that would be yet another good play on this, is to all those. I assume it's going to be pay, but no one's said anything yet. So I'm kind of watching the stock to see whether it moves or not. And maybe the action over the last few days has been because it's not going to be them. But if you could replace all those terminals with something like NFC payments for Apple, I don't know if Apple could actually move that much to make me interested. But could this be a $50 or $60 stock if they really get in on replacing all those terminals at every location in the United States that has one for NFCs? I think that would be a very interesting business indeed. So I'm going to be watching Pay and some of the other companies out here that are in that part of the business. But let's look at the other ones. But pretty much they're all saying the same thing as far as I can see on MasterCard. That is that they're getting tighter and tighter and tighter. And while we did have kind of a slightly higher high July 15th compared to the May 27th high in MasterCard, it is really basically these things are setting up in this triangle. And I suspect we get another 4 or 7 trading days with little or no volatility that we're probably going to break somewhere around that 19th of September. And my guess is that this thing's going to break higher for a few days. We're going to get no volume in this thing, and maybe it even lasts a single day. And then that would peg the high for this year in the S&P, and we could sell off from there. I thought maybe this market might hold up all the way into the elections, and that's still a possibility. But to me, it looks like they're doing everything by hook and crook now to hold this market up for the Alibaba IPO. If you're on Wall Street, you're going to make far more money kicking out that IPO than doing anything else that you could do. Cheating your customers, screwing with the ETF structure, all the things these guys have gone to jail for in the last 15 or 20 years kind of pales to the amount of money that they make in M&A sometimes, and mostly in kicking out this paper. They get a huge amount of shares, and if they can keep the price up on those IPOs till lockup and the day that they can get out, the amount of money made is astronomical, and why they are in business. But it is, let's look at American Express here, just to make sure. AXP, kind of the same thing. We've got, you did have a higher high on June 1st, but I think we're all in these triangles where we're going to be trading in narrower and narrower ranges probably for the next 7 to 10 days, basically on to expiration on the 19th of September. We'll know a lot more tomorrow. Options expiration goes delta neutral tomorrow. If you need to know what that means, you can always email me at path@tfnn.com. I'll be glad to take a look at it. And you can, in fact, email me now at path@tfnn.com, or you can call me at 877-927-6648. The question in the den is, will Visa, MasterCard, American Express, eBay? Probably eBay has the most to lose with PayPal if they go around it. And Amazon's trying to do their own pay thing, but really haven't done it so far. I can't see Apple trying to screw Amazon over. Facebook, probably no exposure either way. Twitter is trying to work with its own mobile payment where you can buy things online, buy now. Saw some of those stuff. To me, I think I would look at the people that are most going to be affected would be PayPal with eBay. This could supplant the PayPal, which is the biggest part of their business. Facebook, I think that's about it. Yes, it could affect Visa, MasterCard, and American Express. It's just unknown at this time. Would those guys do something to remember, especially in the United States now, only about 15% of new phones are Apple phones. So is this a play on Visa, MasterCard, and American Express to find out everything Apple has and then move that on to Android, which would be interesting also. But looks pretty good so far, so we'll try to catch up on what Apple's doing here. All the workout stuff, all the other stuff, fitness, watch stuff. I'm looking through all the live blogs here to see if there's anything else exciting. You can talk to it with but almost all this stuff was already talked about, so, or at least to me, so it's not new to me. Two sizes was new. I don't think the market knew about that. It's got a sapphire crystal. It's got sensors on the bottom of them to check your pulse and temperature. A lot of what people are trying to figure out is whether or not Apple has a deal with IBM to do everything that would be necessary on the health side of it, so people could be monitored 24/7. And kind of tough to see now. Kind of a cross between a iFit and some of the other things out there. Yeah, let's just take a quick look at what Apple's trading at out here. See how the market reacts to it. Pretty much, it's up $1.44 now. So it went up to 103.08 today, trading at $100. I think they want to see when this thing's going to ship, and it's not over now. So we'll have to see how this plays out. I think we're going to know a lot more about Apple in the next hour. But if I had two questions to ask right now, which would be, okay, have you made a deal with IBM for the back office for all the applications for the iWatch? How much is it going to cost? And when is it going to ship? I think those are the three questions everybody's going to be asking about it. But as far as I'm concerned, I like some of the watches I've seen designed by other people. Certainly the interface, certainly the screen, a lot of what they've done is going to be better. But if they're selling it as a fashion accessory, I don't think some of the ones that we've shown on the Tech Insider are going to be anything different. So we look at the broad markets. The S&P's off almost 8 points now, 1.86 billion shares. It's going to be pretty tough for them to hold this thing up for 2,000 at 2,000 into the Alibaba IPO. We are going to see some selling, I suspect, over the next few days in some of these stocks. Today it's Amazon, maybe Apple tomorrow. We might see a lot of little volatility. My guess is they're going to try to keep this market up and flat. If we're probably going to see a low during expiration, it's probably going to be tomorrow. It's probably going to be before 2 o'clock tomorrow. And, if you're trying to kick out the largest IPO of all time, you're going to need a market that is fairly stable, and that's what we're looking at over the next couple of days. I'm going to go look at a few other stocks out here that I've been watching, and it kind of looks like maybe the automotive sector has thought that it has hit a high. Certainly when you look at Alcoa, which has been running on selling aluminum into the car business instead of Detroit iron, as they used to say. This thing, it did go above by 14 cents, above the July 23rd high, $17.22. 31 million shares got with it with half the volume on September 4th. It's kind of gone sideways from then. But certainly we're not having a lot of volume into these high volume moves that we've seen back in July. And in September, we should start seeing increased volume out here. So you have to look at that. Some of the other stocks that have caught my eye out here, we talked about Ford making what looked like a fairly decent move up here also. What I really disliked about Ford was the strong volume down that we saw from July 24th down to the August 1st low, and then the very low light volume move back up to the September 3rd high. We're back down to the previous low. Volume was higher yesterday at 47 million shares. And, of course, even though it closed a little higher yesterday, we are getting a little pressure on it. Some of these other stocks that make me think we also have seen a high in the automobile business is CarMax. It has pretty much tried to come through the 12 million share gap up high from July 9th at $53.70. That volume at even that one, if you do the conservative route, was 2.5 million shares. If you do the less conservative route, it went up against the 620 high that had 12 million shares. Anyway, of course, yesterday, 1.2 million shares, so not even close to the 2.5 million shares of July 9th. Not picking up volume here, but I think this thing's going to play. I think you could see CarMax back in the 46 range fairly quickly, and we're going to continue watching that. Of course, gold weaker today, and we're starting to see continued weakness in it. I didn't like the way we were long about $10 in JDST in the daily newsletter, and sold out on Friday. I think I sold it at $13.20 or $13.30. Went back to $12. Quite a kind of a little reversal on it. This is getting back to probably everything I was looking for, and which was a 50% retrace for the first movement in this. What I was also saying is that it had the opportunity to come back to the confluence level, which is at $21.34. So if gold totally falls apart out here, that would probably be the highest that I would be looking for between now and maybe the end of the year, is that confluence level between 22.50 and 21.34. I'm kind of hoping this thing kind of pulls back and gives me another range, but we're into the gap down that happened with heavy volume. That happened on the 19th of June with 5 million shares, and that's the gap that we're looking at here that we are coming up to in the bear ETF juniors. And if you listened to me last week, or was it Monday? I think it was last week, how poorly run most of these junior companies are, and my guess is that they don't have cash to make it if gold stays below $1,300 for another 3 or 6 months. So we'll look at that. Oh yeah, you're going to see the, I talked about it yesterday. It's an easy story to carry with Apple, and that is it gives many people the day off and their brains a day off in the industry. You get a few sycophants like Walt Mossberg on and a few others of these guys where Apple can do no wrong. Of course, they were corrupted a long time ago, the same way that CIA corrupts assets in foreign governments. Sometimes the honeypot with the sweetie pie. Sometimes it's It's Steve Jobs flying out on his private jet, giving you private demonstrations of a product at 40,000 feet, flying you to the nicest restaurant that there is in maybe L.A. or Mexico or somewhere else. And pretty soon you can't say that Apple does any wrong. But it's an easy story for Bloomberg, an easy story for CNBC, and I actually said that this morning in my newsletter. We'll be back in just a minute.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
A couple of things going on. We've got Boner and U2 is playing now at the end of the Apple thing, so I assume it's over. When we look at Apple, the stock, it's up $1 now. It was high as $103.08, now trading at $99.36, which pretty much tells you everything we probably didn't hear when they were going to ship the thing and how much it was going to cost and how much money we were going to make. It's as far as they're concerned, it's what have you done for me lately. Apple pretty much... people saying, hey, we're going to wait for the proof of the pudding. I'm not going to be shorting Apple today by any means. We're going to start seeing huge amounts of hype around Apple over the next few days. Of course, they're going to start taking orders. It's an easy story to cover. In fact, I said so in my newsletter this morning. I said it's all about Apple today, and they expected its first new product in 4 years. The stock price of Apple, as we now know it, has been held up by Apple by share buybacks over the last week. It's an easy day for CNBC and Bloomberg, as they have about 6 hours of speculation before we really know anything. And when you have a day to fill with new content, it's just about a vacation for segment producers. They bring on a lot of people that speculate all kinds of things until you really know what's going on. And it is one of those days out here where we kind of need to let the dust settle as we look at some of the things that are going on in the marketplace. But a few stocks out here that are probably going to move fairly quickly once we start seeing these iPhones actually delivered and disassembled to find out what's going on. Wanted to keep an eye on Broadcom out here, BRCM. This one's right up at its high on lighter volume. If they didn't get a little taste, if they didn't get their beak wet by Apple, this could be one that comes right back to this gap up. That gap happened on June 2nd with basically 50 million shares, and a nice little gap out there that has not been tested, so I'm looking at that. Sent an email to Andy Heck. Maybe he'll talk about it later today. But Conagra Foods, CAG, another one up to its low. This thing came down on heavy volume. It's gone back up to this thing, and it's given a major sell signal. So we have to look at does kind of show just what's happening up here. June 17th, $32.85, 4.4 million shares, 2.4 million shares yesterday. This thing's back in the trading range, but I'd be looking at commodities out here. Of course, we've seen gold down fairly significantly. Of course, most of the other things, crude, the rest of them, Brent's off 97 cents. Trying to see what else is going on here as I talk off mic. Sorry about that. Just see if anything. I've got some other monitors over here at my big trading station. Well, we're off 9 points on the S&P cash. But especially ConAgra. Maybe Andy's got a better view about what's going on out here. I know Tom's getting ready to come up here in just a minute. But keep an eye on that. There's some other ones out here that have me looking, especially in the semi sector, thinking we may be ready for another sell-off in those SMHs. Kulik and Safa, Click and Clack are always ones to watch. Basically 750,000 shares in the last June 17th high at $15.10. Went above it today. It's closed back below it with just 420,000 shares so far. We talked about CarMax, some of these other stocks out here. You want to see Sealed Air, which is a company that makes those little peanuts and other things to go in shipping. Always a good one to watch. It's made a high on much lighter volume. SEC. We're running out of time here today, but we'll talk tomorrow. Same bat channel, same bat time. So when you can, not when you have to.
You've heard Basil Chapman on the air as the host of the Tiger Technicians Hour, and now's your chance to spend a full day learning his trading methodology, the Chapman Wave. Basil has taught thousands of students his trading methods over the years, and on Friday, September 12th, he'll be hosting a one-day online Master Trader Series class. Included is a month of his daily newsletter, The Opening Call, a $128 value. Basil will cover a variety of topics and techniques that he uses when looking at key charting patterns that repeat consistently in the market and that you can add to your trading methodology. You have access to the full 8-hour archive for a period of 30 days, as well as availability to ask questions of Basil in the month following the course as you practice what he teaches in this full-day Master Trader class. For all the details, visit TFNN.com and sign up for Basil Chapman's Master Trader class on Friday, September 12th. Reserve your seat today.
You're watching Tiger TV.